One of my recent holdings, ASML, just reported Q2 earnings for 2025. So I thought this would be a good follow-up video to the last video I did about my portfolio update, just to go through the ASML Q2 earnings report, the numbers, and the thesis behind all of those metrics, and also to give some of my thoughts about just where I think this is headed, about the drop that stock drop that happened within the past 2 days, and just overall how I feel about it going forward. So with that, please like and subscribe, and let's get started into this earnings report and break down the numbers and see where this is headed. But before I get into ASML's earnings and the thesis behind ASML, buying ASML in the public account, I want to go over, for newer investors or investors not familiar with ASML's place in the industry of AI and semiconductor chips, just where ASML sits and why it has such a strong moat compared to other companies. You'll see that as I describe this process and this kind of chain of downstream companies that feed one off of each other, that you'll see why ASML is a great choice for an investment. So let me get into this. So ASML is the machinery. So machinery, high complex machinery that even nation states can't reproduce. $400 million lithography machines that are able to create the chips, the fabrication of the chips that are needed in downstream processes and devices and GPUs and all of those things. So ASML sits at the top, and under that are the pure foundries and the integrated device manufacturers. So those two are separated, but I'm grouping them in together because they are both ASML customers. So ASML is selling these very complex, very expensive machines to both of these types of companies. So let me start with pure foundries. Pure foundries, companies that are pure foundries, create the chips that are used by downstream processes. And they don't do anything else. They just create the chips and then sell those as their product. Now, integrated device manufacturers are a mix of both. They create their own chips and then they design those chips to be used in devices or further products down the line. And then finally, you have, at the end of the spectrum, you have pure play fabless companies. Fabless meaning fabrication-less companies. These include some of the more common known companies: NVIDIA, AMD, Broadcom, Qualcomm. These companies are very front and center at the AI revolution because they are the first line of companies that investors see when they're looking at AI related companies. So yeah, where do you go for AI related chips, GPUs? You go to NVIDIA or you go to AMD. So that's what investors see first. But if you look a little bit deeper into upstream, what's above NVIDIA? Who's providing NVIDIA with these chips? It'll be something like TSMC. So I hope that gives you an understanding of why ASML is so important. We're literally almost no competition that create the actual machines that make the chips that TSMC and Intel and Micron and SMIC can use to provide their customers with the chips that they're going to use later on down the line. So that is why ASML is so important. That is why ASML has such a big moat, strong moat. Okay, so let's pull up the investor presentation that includes the Q2 results for ASML. Do that. So here we have the investor presentation. ASML top line, they're presenting that ASML reports $7.7 billion in euros in total net sales and $2.3 billion in net income in Q2. Full year 2025 expected total sales growth of around 15% with gross margins around 52%. 52% is very good gross margins. Let's look to see what their highlights are. So their major announcements here, talking about semiconductor industry remains strong. Their language that they're using it's a very strong business. It's still strong. They're anticipating growth based on this language. Remains strong, driven by artificial intelligence adoption through or across an expanding application space, and expected to surpass $1 trillion in revenue by 2030. So this is very important because, like I said in the previous segment, that ASML sits at the top of all of this growth and all of this downstream progress will be feeding ASML for years to come. So it's really good to see, numbers posted to how much the addressable market could be, especially by a time frame. So 1 trillion by 2030 means a lot of growth for ASML, potentially, if no other competition comes out and things like that. The industry will require major innovations to address AI power consumption and cost challenges. So that's interesting that they mentioned that. That could be a play on AI energy companies as well. I know there's a lot of downstream companies, very downstream companies like Meta and Google that are making nuclear energy deals, just to power this progress going forward. So that is an interesting point. It's a tangential point, but it is an interesting point. Our customers remain at the core of our strategy, and we believe that lithography will remain at the heart of the innovation. We anticipate that an increased number of critical lithography exposures for advanced logic and memory processes will be required. So again, introducing more growth, more projection of growth for this technology and moving forward. They are improving DUV and EUV performance and cost effectiveness and scale EUV technology well into the next decade, forecasting growth. Achieve 2030 annual revenue between approximately 44 billion euros and 60 billion euros, with a gross margin of approximately 56 to 60%. So right now, like I saw in the previous two slides, 52% gross margin, and here they're anticipating 56 to 60% gross margins in 2030, by 2030. So they're anticipating an increasing gross margin percentage, which is great, and that tracks into their addressable market that they've been having here. So yeah, that's a good increase, and it plays into a good growth scenario for this company. Yeah, so we expect, this is the last important piece right here. We expect to continue to return significant amounts of cash to our shareholders through growing dividends and share buybacks. That's exactly what you want to see, honestly. That's exactly what you want to see as an investor of this company. So you want to see high growth, and you want to see share returns, capital returns back to the investors. So share buybacks, dividends, those are two main ways that investors get compensated for holding shares. Not the only ways, but those are the two main ways. And they're continue to increase growing dividends and increase share buybacks. Perfect. That's what I want to hear. But now let's get into the numbers. Business summary. And so here we have Q2 results. Total net sales, 7.7 billion, net system sales, and now they're segmenting out the net sales into their different services and goods. So here we have net system sales at 5.6 billion, of that 7.7 billion, and then installed base management, sales at 2.1 billion. One thing I wanted to mention about this slide with the installed base management sales is that part of their net sales is underestimated by investors. Because what that line item basically means is these machines cost a certain amount, $500 million. They're sent to the company that bought them, but they need to be managed. They need to have help running these machines. They need support and maintenance for these machines. And that's basically what this installed base management sales number is. So as their products and orders grow, this number is definitely going to grow because these are very, very complex machines, and ASML is the only ones with the advanced knowledge. They're the ones building the machines. They're the only ones with the advanced knowledge of how to maintain and support these machines. So 2.1 billion euros in support and management and maintenance is going to grow. So that's a line item that is very underestimated. By just looking at the number, you would think, oh, that's just a smaller number than the actual system sales. But it will be growing as the number of products grow in the field. That number will be growing. I just wanted to mention that, and that is a key point in looking at these numbers and seeing how they'll grow in the future. Gross margin 53.7%, amazing. Operating margin 34.6%, very good. Net income as a percentage of total net sales 29, almost 30%. Earnings per share 5.9 euros. Net bookings 5.5 billion euros, of which our EUV bookings is 2.3 billion euros. And EUV basically stands for extreme ultraviolet lithography, and ASML is the only company in the world that can make an extreme ultraviolet lithography machine. And why this is important is the science behind it is that it's an increased numerical aperture, which allows for higher resolution and smaller chip sizes. And that's integral in, creating AI GPUs and downstream devices and stuff like that for AI. You can see that 2.3 billion euros of the net bookings is about half of the net bookings is EUV machines, which is great to see. And I'm assuming that's just going to increase in the future as the need for smaller and smaller chips and higher resolution chips increases. So EUV systems accounted for almost half of those 5.6 billion euro sales, net sales, as you saw in the previous slide. You can see the geography breakdown of where those systems were shipped to. Huge percentage amount to Taiwan and China. But this can always change. It's not like these systems are very expensive, so it's not like they're buying it at regular intervals. I think the number of sales will increase over time, but there's various other factors that go into if a company is ready to do it. There's geopolitical tariff issues now, so investor can't predict really what exact date and time companies are going to buy and schedule. So that's why the net bookings is such an important number, because those are confirmed numbers, and then going forward you will just have to keep looking at that number and figuring it out. But they do have net sale numbers of each of the machine types. So ultraviolet, extreme ultraviolet here 11, and then the other different machine types they have the numbers for. So they did break down here more of the net sales by end use, which is very interesting. So logic continues to be a very big portion of the end use of these machines. Install base management is, like I said, that yellow bar will be increasing the more the need for support and maintenance going forward. We'll see what these numbers look like at the end of the year, and then we can compare year over year. So here's some more information that is very important to investors. So cash return to shareholders. I like how their management team is really breaking out the investor value for investors. So they're really showing that management cares about the investor return. So here in Q2, ASML paid a final dividend of 1.84 euros per ordinary share, together with the interim dividend paid in 2024-2025. This resulted in a total dividend of 6.4 euros in 2024 per ordinary share. When you buy as ASML, you get share buybacks and you're getting growing dividend. So, and in Q2 2025, we purchased around 2.3 million shares for a total amount of 1.4 billion euros. And you can see that these numbers, the dividend yield, the dividend per share, and the share buybacks are increasing and they have a good trend of going upward. So this is a long-term hold. It's perfectly what I want to see as a long-term investor in this company. Outlook and guidance. So here, total net sales between 7.4 and 7.9 billion for Q3, which is much better than what they have here, about 2 billion euros more. Of which installed base management sales are around 2 billion they're projecting. Gross margin between 50 and 52%, which is basically unchanged. R&D around 1.2 billion euros for the costs. And SG&A, which is selling, general, and administrative costs, around 310 million euros. For the full fiscal year 2025, they expected total net sales growth is around 15%, gross margin around 52%, annualized effective tax rate around 17%. So here we have the consolidated statements of operations in euros, millions of euros. And you can see a lot of these numbers are staying steady. The most important ones are obviously net sales and a profit margin, the gross margins staying pretty steady, around over 50%. They're keeping their R&D and SG&A costs in check. Yeah, these numbers look good. And I think there is some seasonality to the lithography systems being sold. You won't get, regular implements of that. So this doesn't concern me too much. And going from 100, 116, 132, then 77, 76, that doesn't concern me too much, as long as it's not a protracted trend of declining sales. I think this is okay. And they have net bookings, which is probably the most important number here. That's staying. It had a huge dip in Q3 of 2024, but then jumped up to well over the average, 7,000. Then it's kind of just stabilizing. You can see that they have 9 billion euros on cash and cash equivalents. And so this is a little bit of decrease from Q1 2025. Their free cash flow is 319 million euros. Total assets are remaining similar to last quarter, at around 45 approximately billion euros. And that's about it. So looking at the numbers, it looks good. There's a couple of things that I would note and keep an eye on are the gross margin. I want to make sure that stays over 50% going forward. I want to look at the net bookings number, make sure that stays consistent and strong, and make sure that they're not overstretching themselves with their cash to debt ratios. They look like they have a solid balance sheet. I continue to hold ASML. I would add to the shares if it drops and dips more. Like the last video, I did do an analysis using my software, and I saw the fair value, the key metric valuations, and all of that. And after these results, I want to reevaluate that in the subsequent future video and see where everything plays out and see if it's still a fair value play. But as long as it is, and as long as these numbers stay strong, I am adding to my shares. All right, guys, that'll do it for this video. So if you have more questions or comments about ASML and their earnings report, please leave a comment down below. And as always, like and subscribe. These videos take a long time to make. And I'll see you guys in the next one.